Okay. What's up, Mr. Mario? Let me start muting things. What's up, everybody? Ooh, I'm a little worn out today. Need some sleep. Yeah. How's everybody doing? Mr. Struck? What's the story, Mr. Struck? Let me get some of this stuff off of here. I should have a separate screen set up for the webinars. All right. Oh, I got to mute this. Hold on. All right. I'm going to keep it short and sweet here. Waiting till the Rays playoff game. I think, playoff baseball struck. I don't know. It's too intense. I like the regular season better. I enjoy it a lot more at this point in my life. I don't need any more agita, especially with these Yankee teams of late. Really frustrating offense to watch. You know what I mean? Well, yeah. So we'll keep it short and sweet. Again, just want to get everybody caught up to date here as far as where we stand. Again, I think it's pretty clean cut to where you kind of have an idea of where we're at and what's missing to possibly change, in character or trend. It's more than likely going to take some sort of surprise. But I think the more important thing to acknowledge is what we likely have to deal with if there isn't any shock or surprise that shows up out of nowhere. The type of environment and backdrop I think is important to acknowledge because it can get a little tricky. And I think the problem is that it's one thing when you got a tricky tape and it's a tricky tape and it's every day, right? So you to kind of stay away from it. Okay, for me, that's a lot easier to handle because if you force trades, you're going to get chopped up and spit out, and you're not going anywhere. So there really is no incentive. But I think the kind of the backdrop we're in currently is that there will be these pockets of cleaner price action and tape. If you avoid and you're on the sidelines, you certainly can catch a little FOMO. And not only that, I think you want to be a part of it. And I'll tell you what, if you have no idea what I'm talking about, I'll explain to you in a minute what I'm referring to. But I think that's the more important thing to acknowledge here and kind of deal with what we got and what's the best way to combat it, things to look for. But let's jump into it to start, okay? I think now when I say clean cut, we got a clean cut picture of the current backdrop. What I mean by that is, if you remember what we've been looking at the last few weeks, a lot of the things we look at as far as big picture signals are kind of in between right now, right? You still have some constructive things out there, okay, that certainly make us want to feel bullish about things, okay, and look for opportunities. And the stuff that really gets you to the point of concern, again, kind of an example earlier this year, a lot of those cautionary flags that started to go up one by one, they're just not there yet. They're not there yet. And again, I think you don't want to spend too much time on why they're not there yet. Because when you're dealing with kind of sentiment and positioning, it's always different. It's always different. People feel differently about certain price action than they do others of the past. Certain president in office that they may not feel good about, right? There's a million different things and factors at play. But I think the more important thing is to acknowledge the signal, and the signal is telling us that there's still an appetite on the sidelines that really hasn't participated in a major way yet. Okay, so for the market to kind of change character and change behavior on itself, in a sense, right, without some sort of major catalyst, you usually have to have positioning more to the full side, right? The old adage, when nobody's left to buy, that's kind of where problems arise off the smallest of catalysts, sometimes not even any. Okay, so that's why I think they're important to acknowledge. And just going through them quickly, because a lot of these things we've been looking at, through the correction earlier in the year, all the way through the rally and up until each and every week we come on here. But this is kind of, I think, the best take on where positioning is at. These are Sharpies, right? Commercial hedges in the futures market. And this is Sharpie exposure, as we refer to it, net exposure combined in the whole stock index complex. And you can see here they're still long. They still have long exposure in equity index futures, right? Their goal is to be hedged, especially when prices change aggressively and create sentiment and positioning to change aggressively, right? That's why they're dealers, they're commercial hedgers. That's their job, to hedge. So when you see them not only not hedged, but unhedged in a sense, right? They're still holding on to long exposure net. Tells you a lot about positioning, right? As bullish as it seems, as crazy as some of the more speculative pockets of AI and some of these niche, trendy pockets of the market have caught fire of recent. A lot of retail participation. The big picture, right? The big money out there is not all in, and far from it. Okay, now things can change fast, but right now it's just not there. And that's the main takeaway from this right now, is you still don't have any cautionary signs coming from this crowd yet. Now, again, and sometimes they nail the highs. Sometimes when they get hedged, the market rolls over the following week and tops there. But there are often times where a market will continue pushing higher, even as they are aggressively hedging into that strength. That's not uncommon. So again, I'm just making a point that for them to not even be hedged at all yet is pretty significant. Right, it's pretty significant. So that's kind of I think the main thing out there right now that I'm keeping obviously close tabs, because I think it gives you the best impression of positioning out there instead of taking guesses. In liquidity, right? And I'm no liquidity aficionado, but I mean, if you're not paying attention to the liquidity backdrop, I think you need your head examined. Because a lot of this speculation and this risk appetite, that's where it stems from, right? When it's not a coincidence when you have these abundant liquidity, high liquidity environments, right? That money always seems to find a place somewhere, even when there is a legitimate excuse to sell certain areas of the market, right? Or to sell equities. They'll find a home in something that is kind of bulletproof in a sense. And what I'm getting at is kind of what you'll see is some of these AI mega caps as a defensive trade, because when there's tons of liquidity out there, money has to find somewhere to go, right? When liquidity tightens, when the Fed's on the other side of things, that's what usually creates a problem in risk assets, because that's when they kind of batten down the hatches across the board. But you could see this has been the complete opposite ever since the start of April. And this kind of looks ahead, right? So it's giving you an impression a couple months out of how liquidity stands. And you're still in really good shape here. On top of that, you have the Fed who started cutting rates and maybe, ongoing the start of a rate cutting cycle on top of it all. So the first time in what you would call a bull market the last few years, you've had the Fed against you, right? Now, for the first time, you may have that stimulus on your side, which benefits a lot of different areas of the market, okay? So, again, the liquidity environment is still, I know a lot of people are, predicting what liquidity may look like in the future. That may be the case, but as of right now, liquidity is still abundant and still flashing bullish signals, okay? So that's another major factor here. This is kind of what we've been looking at the last few weeks, because on the positioning side of things, this is kind of the missing link in a sense to, if you're wondering, how and why is positioning and sentiment not as bullish as you would think it is with a market that's looked like this, right? This is the reason why, okay? The discretionary money out there, money managed by human beings, a lot of emotion, a lot of thought, a lot of analyzing, handicapping involved, they haven't jumped in the pool yet. They've been non-believers in this rally. Now, again, we can come up with many excuses and reasons. One, I think that probably played a big part was the Fed not cooperating. We'll look at funding spreads that Goldman puts out. They've started adding exposure since the Fed has become more dovish. So a lot of these macro funds, they've had probably a legitimate reason why they weren't really getting aggressive. Okay. So now maybe with the Fed starting to cut rates, you start to see these guys become more active. We've already seen it from the institutional crowd, right? Hedge funds haven't really yet, but some of the long-only funds, stuff like that, have been doing some buying of late. Maybe we'll see them start to get aggressive here. But again, that's predicting the future. We don't like to do that. Right now, the takeaway is they are not net long yet at all, let alone aggressively long, right? And that's what you're seeing here. So that, I think, is, again, the bullish, why we need to remain bullish, right? We've talked about this. Nothing's changed here, okay? Why I think it still pays to look for opportunities, even though there's, again, a lot of stuff, especially the stuff that we like to play, that's overheated and overextended, to say the least. Okay? I mean, that's a fact. All right? A lot of times, more than not, when you see a lot of things overextended and overheated, that usually coincides with warning signals on some of the stuff we just looked at. Okay, that's not the case now, and that's why, in my opinion and what I'm doing, I feel it's still worth looking for opportunities to put on some risk. Okay, so what are the risks here, right? I mean, that's the main takeaway in all of this the last few weeks, and the point I've been trying to get across to you guys is that while it's still worth looking for new opportunities and putting new money at risk up here, okay, we absolutely don't want to be as aggressive as we were earlier in this cycle, right? So coming out of the April correction, when things started to look more and more constructive and you had nobody in the market and pockets starting to break out and flow starting to find new names, that's where you want to be most aggressive, right? We don't want to have that same exact approach now here with putting new money at risk. Again, and that's a big, I stress that point because I think a lot of you guys don't understand what I'm saying, right? I'm not talking about you holding positions or you holding runners in positions that your entry is 150% ago. Okay? That's easy to hold right now, in my opinion. Okay? That's easy. I'm talking about buying stuff up in these areas and putting new money at risk, not holding on to winners. Okay? And that's a huge difference, right? Huge difference. Okay? But so the reason we don't want to be as aggressive as we were even a month or so ago is because you have some risk out there now because of how far we've come off the lows, right? You don't have everybody bearish. You have some overheated pockets out there and some pockets of positioning that could be a threat if there is a catalyst, right? If there's a legitimate excuse for some of these parts of this market to start selling, okay? And systematic funds, that's one of them, okay? So again, nothing new. We've talked about this. They've been loaded and long for a while now, right? They look like kings. Like they get a lot of flack for kind of their whole agenda and how they approach the market, right? They're trend followers. But a lot of times at extremes, it looks like they're kind of the dumb money. But if you're wondering where they pick up the money, where they make big money, is what you're seeing right now. When they get long and aggressively long and stay that way, and they catch these nice trends that just continue higher. Okay? That's where they're at their best. Now, the problem and the risk is if they're triggered to sell, okay, there's no thought and opinion behind this. Just like they were buying aggressively higher while everybody was still bearish, okay, there were systematic reasons for doing it. It's going to be the exact same when they start selling, okay? But things have to happen for that to occur, right? The market has to lose momentum. It's got to crack some downside levels, okay? And that's where they systematically will bring exposure down, okay? The issue with kind of or worrying about them or relying on them if you're a bear for them to be your kind of your number one signal for being bearish is their triggers have been, there's been a decent amount of room between where they start to sell aggressively and where the market currently sits. Right? So example, I'm using just like rough numbers on FPX, right? Let's say right now 6,700 FPX. They don't aggressively unwind their long exposure until SPX cracks 6,400. Right? So you got 300 points of air there before it becomes a factor. Okay? So while it's a risk, you don't actually see that risk in effect until the market starts to lose momentum and cracks downside levels. I explained to you guys, like a lot of times when you get into this type of situation where systematics are long and they catch a trend and they catch it for a while, what usually happens is something like we saw earlier in the year, very similar to this, right? You get kind of this before their levels crack. Right? So what happens is the market starts to lose momentum, right? It forms a top over some time, a couple months. And then what will happen is, even though the market hasn't really gone much higher, okay, their triggers has come up a bit, right? So let's say again here, their trigger is 5,600, looking at this SPX chart. right? And they go through some chop here over the course of 2 months. Now their triggers may be 5,800. And then you get a little selling out of that digestion, and that's what sets them off. A lot of times that's usually how it looks. Not always, okay? Otherwise, what you usually need is some sort of major catalyst, right? That creates kind of that waterfall selling for that to occur a lot more quickly, okay? So, again, that's one of the risks out there. Certainly there are risks, but you kind of can keep an eye on it, right? For me, this is the main thing that I think, well, I know I'm battling, and I think we're all going to have to battle here, even as the market appears bullish. And it's correlation, right? These correlation levels being so low right now. And, volatility can certainly go lower. We've seen it lower. But with correlation this low, there's that risk. There's that higher probability you get these intermediate pops in correlation and volatility, right? So it's the risk of a kind of a quick drawdown, in a sense, short-term drawdown over the course of a couple of days, which we've seen from time to time, okay? That's all fine. That's fine, right? You kind of can battle your way through that short-term, and it comes back and unwinds. I think the bigger problem is what correlation is telling you by being so low is that you get this dispersion in the market that's really, really tricky, right? And you're getting a glimpse of what that looks like right now in the price action, okay? You look at the semis. There are some semis that look great and ripping. There are some semis that are dead and doing nothing. And there are other semis that are actually trading lower, all in the same amount of, all in the same time period, right? So all in that week. There's a lot of randomness involved, right? A lot of random price action, okay? Again, for tactical trading purposes, it's not the end of the world, right? Because you can trade. But I think where it becomes an issue is if you find something that has momentum today, right? And let's say it started over the last few days, so it didn't start today. You run the risk of that momentum not being here the next few days, right? We've seen it in some of the small cap names. You've seen it in some of the mega cap names like a Meta, a Microsoft, a Netflix, right? So again, you go on social media, right, or in chat rooms, and over the last couple of weeks, I guarantee you everybody's telling you they're still hitting winners. They're not running into any trouble. But you talk to any realist out there, and they more than likely have run into a situation where even though the market's up here, there's something they're in that's not participating or even heading lower, right? I know I've run into it for sure, okay? So again, that's a legitimate risk out there, right? Because you have a market that's still strong, that resembles bullish price action, but realistically, it's not as bullish as it may appear. Okay, so that I think, in my opinion, that's what I think the most difficult part right now is. Okay, because think of it logically, right? If let's say even the market remains this way, remains bullish for to the end of the year, the rest of the year. So you got another month or two of this. Okay. Again, when I say of this, more than not, it's likely going to be of this price action, this type of tape, this tricky, sticky tape. It's not, there may be certain days off news like the Fed and stuff like that where you get some high correlation and everything kind of moves together, but that's kind of a tease more than an actual trend, right? So we run the risk of dealing with this, which again is not the end of the world, right? If you're a bull, but of dealing with this for the remainder of the year if we don't get some sort of ring, right? Now there's an in-between, and we've seen it from time to time, right? Here, I posted the chart here. So you can look at it. Okay. So this is kind of a trading view. So you can see it overlap with the S&P 500. Okay. You get these kind of little mini spikes in correlation. And that's what I was talking about with like the VIX. So you get a couple days, right, where you get volatility spike, equity sell off, correlation spikes with volatility. And what that allows is that once that runs its course, okay, you get some cleaner action on the other side of that, right? So it kind of cleans up a lot of the stickiness in a sense when you get those spikes. But again, it doesn't last forever because what happens is correlation again unwinds to extremely low levels and you got to deal with it all over again, right? This being low and going lower, in my opinion, only creates more and more of a problem, right? Like, for example, like you can see here, right? We've kind of drifted a little bit lower here back in July of last year, okay? And that wasn't good because then what that led to is kind of a little deeper of a pull and a higher pop in correlation and volatility. Now, again, a lot of us want that at this point. You know what I mean? A lot of us want that because the other side of that is some really healthy action. But if you're caught heavy-handed, especially in options, into something like that, that could be a problem, right? So let me just, again, paint that. I want to be the wet blanket here, but let me just explain to you what I mean by that. Think of it this way. You're holding on to multiple positions of calls, right? One of them is doing well. It's up, grinding higher. You're making money with it. You're happy. The other two are just kind of hanging around. One's lower, the other one's flat, and you're waiting for them to get involved. Right? You're waiting. The market's continuing to grind higher, but you keep holding and waiting while you're losing time value in those calls. All right. And then something like this shows up. All right. That likely knocks you out. Well, again, depending on how much time you have with those calls, but I've seen you guys, most of you guys play. You're not buying calls with a lot of time behind them. You understand? So that's where this can get really, really tricky. Really, really tricky. Right? So if you look throughout time here, right, correlations been low before. Like, look, we built a floor here and then we kind of broke that floor in 2023. Right? But again, look what happens after that, right? You got to pay the price after seeing something like that. So it doesn't fix the issue if it continues lower. It creates a bigger problem when it needs to resolve. And this is where we're at right now. Okay, this is where we're at right now. So that's, in my opinion, that's for me the main risk is that when you look at things through a risk-reward perspective, and that's how you should look at everything, in my opinion, in this game, right? This here chips away from the reward side of that equation, right? This eats away a piece of that reward side of that equation, right? So now you take the same risk, but the reward obviously is the one that's affected. Okay. So yeah, what's the playbook for this environment? The playbook is to be a lot more selective. What I mean by selective is do not, in other words, wait for kind of your ideal spot when it comes to trades. That's generally what I'm getting at. Where you feel you have a higher probability of success over the short term, okay? And be a lot more nimble, right? When you find that you're right over that short-term period in time, where a few weeks back you would give it a lot more room, or where I think it changes now is you kind of got to be willing to take at least a nice chunk of those profits off the table. Okay, because you run the risk of, again, not that thing that you're in, that stock that you're in crashing, but they may rotate out of it. And you don't know how long they may rotate out of it, right? That's kind of the issue. And if you look, right, I'm sure you're all dealing with it, right? In certain names. I think you're lying if you haven't. I think you're lying if you haven't. No matter what the market cap, there's been these type of issues everywhere. And, the names that haven't had this issue are probably going to likely have these issues. I give an example, and not many of you, I get it. A lot of people on the retail side are not big fans of it, but I know people who trade them and they haven't been too happy. But have you looked at the financials? Well, kind of the market has been pushing higher here, right? Kind of dead money. Index is making new highs. The financials have, especially in the option world, have cost you money, right? This week. We talk about the mega caps. I was just looking at names like a Meta and Netflix and Microsoft, right? Across any market cap. Small cap, it depends. Right? I'm in, underwater on one here. I know that. This AUR, one of the newer names I bought, straight lower right after I bought it. You understand? And yeah, there are other small cap names that have been good and continue to push higher. Right? Some even more so, right? Exploding depending on what pocket they're in. You understand? That's the randomness I'm talking about. All right? That's the randomness. Now, I know the rebuttal again. Well, this one's alternative energy and this one is this. No, this one is nuclear energy. To me, it doesn't matter, right? Because that can change tomorrow. That's what I'm getting at. It can change tomorrow. Right? The names that are out of favor can be in favor, and the names that are in favor can be out of favor. Right? Everything was all bullish, and Bitcoin was dead money, not doing anything, and then just Bitcoin magically turned bullish this week. Right? Some of the semis couldn't get out of their own way with dead money chopping around, and then all of a sudden, some of the semis decided to move this week. While the semis that were moving, like an Avgo, decided to take the last 2 weeks off. That's what makes it tricky. That's what makes it tricky. Yeah, exactly. And that's the that's kind of exactly what you're saying. Keep the chains moving. That's generally what you want to do. Now, listen, don't get me wrong. There's nothing wrong still, I think, right? If you like, I'll give you an example, okay? And I'm not saying I'm right by doing this, but I think it's okay if you want to do it. You understand? I don't think it's something you have to change the approach in for everything. But if you like something that is kind of out of favor now for this particular reason, and you think that's the reason why it's down, you can hold it. I'm not saying you got to get out of it, okay? And more than likely, what I'm saying is if you probably hold it, barring a market correction, it will likely come back and frustrate the living shit out of you. That's the point I'm making. I think what I'm getting at is you don't want to do that with everything. You understand? You don't want to get caught with a basket deep of short-term calls right now when the reward side of the equation here is being chipped away at from this dispersion we're dealing with. Does that make sense? That's what I'm trying to say. Okay? Because again, I don't want you to get the wrong impression. If you sell something, let's say you got stopped out or went the wrong way initially, there's a good possibility you're going to feel like shit in a couple of weeks from now. There's a good possibility of that, barring a correction. You understand? But what happens to a lot of retail, they fall in the trap of now holding on to everything because the market bails them out. And It's only a matter of time before when you do that, that's when you get bit in the ass. Right? That's where you get caught heavy-handed and you get washed. That's the point I'm trying to make. That's the point I'm trying to make. All right. But I think that the main thing, and I know like STEAMROOM is probably sick of hearing it because I've been beating the drum on it. But I think the main thing to just acknowledge is that it's a trickier and riskier tape. That's the main, as long as you are aware of that, you understand? As long as you understand that and you're aware of that, then anything you do beyond that's on you, right? Like it's one thing if you're not aware of that and you're out there slinging and it catches you by surprise. Right? That shouldn't happen right now. Okay? That shouldn't happen right now. The only thing that would reel you into doing that is complete FOMO. Right? And if you have FOMO right now at this point, you know, you likely didn't participate in this rally, and that's a bigger problem you got to fix big picture-wise. As long as you understand what the issue is here, right? Because like I mentioned earlier when I started the webinar, it's pretty clean cut to me. It doesn't make it any easier to trade, but it's pretty clean cut to get a handle on the current environment, like what we have to deal with right here. You know, it's pretty obvious. So as long as you're factoring into that, right? You're taking that into consideration. I think you'll be fine. I think you'll be fine. And kind of to T's point, if you take the impression of more than not of moving the chains, keep the chains moving, as we like to say, I think you're going to find success more than not. Right? It's not going to be like the last 2 months where everything you touched exploded. You understand? But I think you're still going to make money. You're going to run into more losers here and there, or just run into more dead situations on a short-term basis. That's all. Yeah, and well, that's the thing too, right? Like, see, here's kind of the problem. It's a lot easier when all the momentum things, like when everything turns, they turn together. But honestly, right now, I don't think you're going to see that. That's the problem. You understand? And what Baggy Docious is making the point, because he's right. He's saying that once the momentum turns on like an OCLO or an IONQ, then you start to see them all roll over together. I don't think that's going to happen. That's happening here. That's kind of the problem. If that was the case, it makes it easy. Just stay away, right? Just get out of the way. But I think what makes it even more trickier here is that some are losing momentum, some aren't, some are ripping. You understand what I'm saying? Right? You had IONQ, you could say, was losing momentum here. Right? While at the same time, you had bigger piece of poop, right, that were ripping new highs and still going. Okay? OCLO, right, that actually came in here, got down and came in over the last few days, right? While you still had some other smaller micro cap names or momentum names, whatever you want to call it, continue to push higher. It's the randomness. That's the problem. That's the problem. Right? That's the problem. I think that's the main problem here. You're not just seeing it in these names. You're seeing it across every market cap. I just showed you some of the biggest companies in the world that look like that. You know what I mean? You got a semi like AMAT that has been ripping, right? And red hot Avgo, okay, that has cooled off. Right? Now, I know that. Get the rebuttals. Oh, well, Avgo's up too much. Well, what do you mean? Avgo's up too much, but what's his face is IREN is not up too much. Wait, IF goes up too much, but BE is not up too much? That it keeps going? You understand? There's no rationale. There's a lot of randomness. That's exactly my point about this. That's what makes it difficult. For not just longs, shorts just as difficult. What do you think? The short side's any easier? The short side's 10 times harder, in my opinion. 10 times harder. Okay? So, again, this is what we got to deal with. Now, for STEAMROOM members, there are going to be smaller periods where we get cleaner action. And that's like if we happen to get a little weakness where short-term sentiment is bullish, you understand? You get some of these shorter VIX pops, and the unwind of that, you'll get a nice day or two of highly correlated action. So that's kind of where the cleaner action would show up. If you get a catalyst from the Fed, like if you remember when the Fed cut rates, you had some really nice action. I think it was for a day or two of healthy participation. But more than that, around that, it's going to get trickier. Okay? It's going to get trickier. So, again, I don't have no clean-cut answer. I'm just telling you, this is what I think we're battling. We need to battle here. I think this is even the bigger threat than a correction right now, in my opinion. You understand? I think for a correction, you need an outside shock. You need something that the market is not aware of right now for a correction. You understand? I think the trickier part for us is we need to battle this type of tape, which is not that easy at times. No, exactly. Stacy, you can't short this. Trust me. Like, listen, you could, if you stay really tactical, okay, extremely tactical, like even on an intraday basis, you can find maybe some short opportunities, right, on an intraday basis, but it's tough, Steve. It's tough. It's a little bit easier than it was because, again, a couple of weeks back, you had everything ripping, right? Everything. Now, obviously, you don't have everything ripping, so there are opportunities out there. You know, what you're seeing too is a lot of pair trading and stuff like that, which creates even more of a mess. You know, so that's it. There's gonna be back and forth. Like I don't know if you guys realize, you probably have. We were in a period where the small caps were leading. Remember, we've been talking about it. You guys remember? Now we've gone through a phase where NASDAQ is leading again. You understand? It shifted in the other direction. Now, again, that has meant nothing for names because I could show you NASDAQ big names that are down throughout this. But, you know, you're even seeing it at the index level too. You're even seeing it at the index level. All right. I think I made my point here. I know, again, STEAMROOM members, you're probably sick of hearing this. I've been talking about this for 2 straight weeks. But again, I think this is the biggest issue to acknowledge, the most important thing to acknowledge in the current market. You know, so we're clear. Everybody understand? Because sometimes I can't get the right words out of my mouth to explain what I'm trying to explain. Everybody understand or have any questions on that? On kind of this dispersion that we've been talking about. All right. And then what's going to happen? We're going to get a correction. It's only a matter of when. Okay. You're going to get a market pullback. You're going to get a correction. And that solves all this problem. That's exactly what solves this issue. You understand? Because you get a correlation jump. You get everything that sells together. And then once the market bottom and correlation kind of tops out, the unwind of that is the sweet spot where you got that tailwind at your back, right? Where you, again, the way we like to phrase it is you see 5 names catching sweeper activity, you can throw a dart because 4.5 of them are probably going to go higher, right? Now it's a different environment. You guys understand that, right? Yeah, exactly, Patrick. I just, especially if you're a STEAMROOM member, right? Because that's what bothers me. If you're okay with it and you lose money, that's fine. I shouldn't, I'm not trying to tell anybody what to do. My job is just to make you guys aware of this. That's it. May not even mean anything to you, My job is to just make you guys aware of it. Okay. So just to catch everybody, because again, it's mostly STEAMROOM members too. Everybody caught up to date of what I've done. I've obviously been a lot more selective. I trimmed a lot of the older names, but I actually added to 2 of the recent names. So SGHC, I added to this last week. They did some more buying in this thing. Most of you know by now the flow in this thing's been pretty aggressive. I don't have as big as a position as I would like of this type of flow. God honest truth. I'm just being honest. If this was at a better spot, plain and simple. In other words, if this thing wasn't up as much as it is, right? This thing's been a nice uptrend here. I probably own minimum double, triple what I have off the flow. That's how impressive the flow has been. Okay. But I did add to it. If you remember, I sold the initial pop, and what I did is I added back on what I initially sold. Okay, so I got that. What I also added to, which I had no intentions on doing, I added a little piece of this down here. Okay, so again, I got nothing huge here. I got 10,000 shares. You know what I mean? Like, I didn't take the needle here, but I added a little bit to round it off to 10 down here. Because again, my opinion, this means nothing. This, what happened here, them buying March calls, and the type of size that they bought, what it did for a couple days now means that doesn't mean anything to the March buyers. You understand? Doesn't mean anything. That's why they went to March. And by the way, that just is another point, like I'm trying to make to a lot of you guys. We're seeing a lot of 2026 buying, right? A lot of rolling out to 2026 and a lot of new buying in 2026 strikes. So those aren't next week, next month. They're paying for time on a lot of this good-looking action. Okay? They're probably doing it for a reason. So just take that into consideration, because again, what happens is they buy March calls and you get pissed off because the stock goes down the first week, where March, guys, is an eternity, right? From where we are now in option terms. So I just wanted to, and I got a little buy signal on some other indicator that I follow with volume-wise on this AUR. So I added a little piece to round it off to 10 yesterday. I think I did that yesterday. All right. So that's kind of just 2 of the names that I played. I bought some of this today that caught some action. Let me get the symbol here. I have a CDZI. This is some water stock. I don't know what they do. But I bought some of this thing today that they hit pretty aggressively in a sweep. Let me pull it up. Oh, I have it here. Here's some of the top action today. So we'll go through it. Here's the CDZI. So they bought 10,600 grand. There was more action around it. Stock was around 4.5. They played November 5s, not that far out. And that's it. They have earnings in November. I'm not trying to hold it through November. I bought a little, see what it does here. I'm not crazy about the spot. Again, off a rally, but based off the action. Yeah. Again, the only thing, the big thing you're going to hear from me is that earnings are 11-14. I think we have more than enough time to not really be concerned about that. And spot wise, you guys know where I like it, like I like it here. I don't like buying off of, yeah, the stock went from 3 to 5 already. But again, the sweep was impressive. So why not take a shot? Why not take a shot? QXOT, I know you have a longer term interest in the name. We've been seeing primarily leap buying in this name of recent. QXO. But this I like the spot, right? So this is kind of where, right, here's the difference. You're off a rally, but look at this consolidation here. Nice. Right? You get a downside niner, and bing, you get a decent short-term sweep there. Let me boom. Okay. So I know T, you like this name longer term. This was October 24th, 21 calls. So it looks like they're just playing a quicker move here. Yeah, nice spot. Okay. Most of the other action on here, a lot of leaps, guys. Here, look, Oscar, June 2026, Caterpillar, May 2026, Rio 2028. We're starting to see 2028 buying. Marvell, June 2026, TSM, December 2026. Some of the largest size out there has been with a lot of time. A lot of time. Yeah. So again, for some of the, for the trades, and T, this, like stocks the heel because we talk about it so much, but like for me anyway, stuff like you're looking to trade, I think you have better success if you find a decent spot that you like, right? So shorter term action, you don't want to buy off 2026 action necessarily, right? You want it to be within the next 3 months. And I think the spot makes it more appealing for you on a risk reward, right? Because kind of here's the thing. If you're playing this short term, if you don't get momentum in QXO over the short term here, you pull the plug, right? There's no reason to kind of wait it out playing off that sweep. That's a bounce sweep. They're looking for a bounce. They're not buying it and tucking it away. So that's generally, for trades, I like to look for those type of names. I have more success with those type of plays. SGHC, initially, I didn't want to hold on to it because I don't want to do a lot of holding on to stuff. You understand? That's just something I don't really want to start doing now. That's kind of a change for me, right? Because correlation is low for a lot of reasons, but I couldn't stay away. I couldn't, that type of action. So if I'm not mistaken, I think I sold into this run here. I took it off and I left a piece. And then what I did was they keep hitting it. And I added a piece back on last week. I added what I sold back on, basically. You understand? So like I never sold it. But the action's been nuts. They bombed April calls. Then they moved to Jan calls. They bombed Jan calls. And now they started nibbling at in November's. So whatever the reason, just based, again, the flow is all I can tell you. The flow has been impressive. All right, the flow has been impressive. And that's that. All right. So, the stuff this is the prototypical, like for anything I want, I'm trying to stick to anything new that I'm looking to buy and kind of give a little time to. For the most part, I'm looking for this type action where they have that appetite, where they keep coming. That's the stuff I'm willing to kind of give more time. The rest, I'm trying to stay nimble. And I'm trying to stay nimble. That's my goal from here. That's my goal. For the most part, right? For the most part. And again, if you guys remember, like, that's completely different than what I was doing. couple months ago. Like a couple months ago, what I was buying is a little bit of everything and holding. You understand? Like giving it time. Now, I want to do the opposite of that. Right? I don't want to buy a bunch of different stuff and give it time here. I kind of want to hit and run, like T was saying. Keep the chains moving. Keep the chains moving. And again, the big reason for me is this more than anything else is this. It doesn't have to be a problem, you understand? But it's just, I fare a lot better. It's just a fact. I fare a lot better when I'm playing off the unwind of this. Right? I've explained it to you guys millions of times. Kind of that funnel analogy, like I always use. All right. So kind of my risk parameter is kind of like this, right? So early in the trend, right? Early in the breakout where sentiment's on your side, all of that tailwinds on your side, that's where I want to be most sloppy and aggressive. So I'm willing to put on more positions. Like I said, I'll buy a little bit of everything and give it time, knowing that I got that tailwind and support underneath me, right? And then as that trend gets longer in the tooth, right, like a funnel, that's where I want to have on less that I'm holding, right? And I'm okay with being early, even if the market continues higher, because I'm still participating, but I'm just carrying less weight and being a lot more nimble, right? Ultimately, to avoid that, right? Because if I get caught with this up here at any point, I give all this money back. Understand? That makes sense? And this is what it ends up looking like when it's all said and done. Looks like a birthday hat with a penis coming out of it. But that's generally the approach I try to stick to. How do I get this off of here? Yeah, it's funny that MMYT. I remember this name because it was one of very few underbelly growth names, okay, that broke out with good fundamentals here. And I remember it, right? So here, this was kind of when the mega cap were all rallying, all the big Max 7 names were leading. Not a lot of names like this were participating. This was one of the few, so I remember it. And then look, T, like you had this big move, and this is just normal, I think. This is just normal digestion. And now you have some buying here, which makes it interesting. Definitely interesting. Yeah, I know they're profitable. I don't know if their growth is still as crazy as it was back here. They had crazy growth back here. Yeah, see, look, $1.44 a share they reported there. So it looks like growth slowed a little bit here. But yeah, again, spot wise, right? You got kind of a consolidation, lower end of the range here. What was the sweep? It was with time, right? Let me see. August. Wow, that's a lot of time. My God, so many of these type of plays. August 2026, 120. That's a lot of time. Interesting. Yeah, it's kind of it's not something I'm looking for right now because of what I just mentioned to you. I don't want to really tuck away too much right now, but if you kind of like the name T, I don't see why not taking a shot if you like it longer term. See, what I'm concerned about, T. Ultimately, what I'm staying away from and trying to prepare for is a correction. You understand? Even though, like, I don't feel like it's coming now. I really don't. Otherwise, I'd be completely in cash if I did. You understand? But I don't want to continue to add weight on, and then I got to pull the plug on everything. You understand? I don't want to. I don't want to buy too much stuff that I'm going to hold with time. Where in a month or two from now, I'm needing to sell everything. So that's kind of the mentality I have right now. That's more of a problem for that stuff. All right, because what I weigh in my head, am I better off buying a name I like now with time, or am I better just waiting for a pullback and a correction and then starting to look at stuff that I like off the flow with time? But if you're just going to buy a little bit, it doesn't matter. It doesn't matter. You understand? If you like the name, you like the spot, you like it long term, you buy a little. Don't go nuts. That's all. Don't go nuts. All right. The name of the game, like we said, I know it sounds corny. You should be okay with giving some money back. All right. You just don't want to give it all back. That's in general terms, what you're trying to accomplish here. All right. Priority number one, no matter what happens tomorrow, the next day, you don't want to give it all back. It's not worth it. If it means you make a little less money, if the market keeps going higher, so what? And I know every single one of you more than likely killed it if you were playing the long side over the last month or two. Killed it. We just want to be smart. Just want to be smart. It seems people who missed out and late to the party want to make up. Yeah, that's what happens, Dimitri. Exactly. You're 100% right. You're 100% right. That's what happens. That's what ends up happening. So and trust me, I'm telling you from experience, that's what I've kind of had to live through. And, just for me, I realize it's not worth it. Might as well wait for kind of that better spot longer term and some stuff. And, just be patient. Just be patient. Oh my God, you're right, Sahil, right? And in September, you got another up continuation month in September out of all things. Nuts. Exactly, Sahil. Exactly. Sahil's 100% right. Yeah, we're worried about seasonally September. You might have to give some money back. You got even crazier gains in September. Yeah, I know. You don't have to tell me. We were all talking about it. And listen, some of us even thought, all right, everybody's talking about September, seasonality. Maybe you don't get a correction. Not only did you not get a correction, you got a complete rip in the most speculative stuff out there. Yeah, T. I agree with you 100%. I said it today in the steam room, all kidding aside. And you guys know this is not arrogance because all you guys feel like this as well, probably even more so. But I'm coming off the best 2-month stretch I've had in a while. I'm not going to lie to you. You know what I mean? Where everything I didn't have anything down that I was playing. Like, and now, I kind of look at things and even just being a little more difficult out there, right? A little trickier. I put something and I'm actually down on it. Like that even rubs me the wrong way here. Like Sahil is saying, we got kind of let's be honest, it was a gift what we got here the last couple of months. Forget about like what he's saying off the April lows. The last month or two, what a gift. What a gift. Yeah, they were flying around all over the place, right? Those VIX seasonality charts. I'm listen, I'm not going to lie to you. Even with, again, the consensus was looking for a pullback in September. I still get weary in September. I always do because of what happens. I can't help that. I sure wasn't looking for the rip in what we got, especially on the speculative end. But that's what I'm saying. Like, Sahil hit the nail on the head. It's a gift from the gods there. So you want to be smarter about things here. You want to be smarter about things. That's all. All right. Anybody have any last questions before I let you guys go to enjoy your night? Anybody wondering what catalysts are on the radar Supreme Court? Honestly, I don't think it's anything that kind of we have our eyes on right now. I know like a lot of people are talking about the tariffs in the fourth quarter taking a bite, earnings season coming up and stuff like that. I just right now with kind of what we're seeing catalyst wise, I think these dips remain shallow. I think it's going to have to be some kind of shock. And shocks usually are something we're not even talking about right now. We're not even talking about. Because of liquidity and because of where the Fed is at, I think it just trumps everything else. You're going to have some kind of global shock or economic shock that kind of supersedes the start of a Fed cutting cycle. Because I think like even you get some economic slowdown here, like even if it slows down more than what people are worried about, yeah, you get a little bit of selling, but then you're going to get the Fed even more aggressive. You understand? The Fed's going to even cut even more aggressive. And what I tell you, what a lot of eyeballs are on and kind of ignoring like some of the stuff that are legitimate worries that you're mentioning, they're kind of looking ahead in 2026 and they're saying, okay, the Fed's going to start cutting rates here, right? God forbid it helps economic growth at the least, right? Even some parts, housing, anything related to rates. And then you got Trump's Fed coming in, right? And then you got all that Trump stimulus that's going to start to bite. I mean, everyone's looking ahead and saying we got to kind of ignore some of this shit here. That's why you're seeing stuff rip the way it's ripping. Right? Because nothing's growing yet. The economy is not like it's scorching right now. Right? We're in sluggish growth right now. That's why the Fed's cutting. Right? You got housing that's standing still. But just a lot of the money is starting to look ahead, like the market always does. Right? So you still got a lot of sideline money where the prospects of 2026 stimulus-wise look insane. Who's going to be the Fed chairman when Powell gets out? What the hell goes on then? I don't even know. You got the president. I don't even know how this happens. It probably used to happen without us even knowing about it, right? Because they were shady to begin with, these politicians, as we know. But you got like a Trump fund out there buying shit. Like, what's that all about? They're buying crypto. You got his sons buying companies and investing in shit. It's wacky times, man. Wacky times. He got some wacky times right now. Can you please check RR? Seems to be flow there. And what do you think? Yeah, no, there's been decent flow in this RR. Again, here's the problem, invest wise, with a lot of these names. Okay. And I get it. Some of you, don't want to hear it necessarily. Okay. But RR, it's Sahil. I think Sahil bought it. I think it was Sahil. I don't know. It might have been somebody else. But RR started catching action here at $3. Okay. Now I get it. It pulled back a little bit here. It went to 5.5 and pulled back to 4, but it's still up 80%. So here you're buying it off repeat activity. You just, you got to understand that. Like, listen, I get it. Up 80% is nothing over the last couple of months in some of these names. I understand, but if you're going into a trickier time, what may happen is you start to get kind of these reversals where it breaks out and kind of gets back into consolidation. We're not really seeing that yet. Some things we are, but there's a higher probability of that happening. You understand? Because you can understand, if I bought, any professional buys at $3 and it goes to 6, okay, I'm not buying more there. I'm going to roll. And that's what a lot of the flow you're seeing. They're rolling those positions. That's what they do all the way up. All the way up. Here's one. EOSE. Okay? Like, I looked on social media yesterday and people were going nuts about the action in EOSE. But, they don't understand it's rolling. Now, they got away with it because the stock is ripping. But you got to understand, EOSE, we've been seeing them bomb this thing for how long? You guys know. They've been bombing this EOSE for months now. So a lot of it's rolling. Look. Here are the open interest changes. Okay? Here. See? 53.71. Those are 10-3 weeklies. They closed 5,000 of them, and boom. They bump them up to October 15th. All right? So you see closing here. You see the closing activity? So now all that action that everybody was talking about on social media and EOSE yesterday, this was the outcome of it. Wasn't any new buying there. It was mostly rolling. So that's what you're dealing with in a lot of these names. All these names. You know where they started buying these things? Here, look at the circle. This is where they started buying it, the recent buying, all the way down here. Now we're still seeing buying up here, but the majority of it's rolling. I'm still holding that equity in TEM. I've had it for a while now. But even there's rolling there too, but looks good. They all look good. They all look good. Here was my entry, TEM. Boop. Me and Sahil, we bought it together. Bull. No, I never played Bull. A couple people in the room played Bull. I think they got out of it off the pop on Monday, I think. Bull. Wait, is this it? Bull? Oh, must have pulled back. Yeah, I never bought Bull. I never played Bull. A couple people in the room played Bull, traded it. But it looks okay. Looks okay. I mean, probably hangs around here a little bit. A lot of these things still look okay. These Oclos and shits, they still, every pullback they continue to support. Look at this. Oh my God, like this, forget it. The amount of action in these things. Here's a smaller one that I kind of like. But this is what you got to deal with here. Look, right? You get these pullbacks. So if you chase, you kind of got screwed, but at the better spots, they're not bad. They're not bad. Yeah, I think the safer approach with a lot of these things, if you see flow, right, more than likely it's rolling. But if it's aggressive enough, in other words, if they're really coming after it and it's off a little pullback like this, like for example, this one, and they start hitting it here, for a bounce, it's not the worst trade in the world. But if you kind of giving it a leash to kind of catch the big move, it's been getting tougher. That's all. Yeah, I mean, at this point, again, Sahil, as we've been saying, if you got a lower entry, right, or a runner, why would you sell it? I wouldn't sell it. You know? Yeah, exactly. Exactly. Honestly, that's where I am kind of with this TEM right now. You know? Like if these things, if the momentum, if the air comes out, this thing is going to fall on its face again. You understand? But at this point, like I've held through all this and I got this much cushion, why not take a shot? Yes, 300 shares. I mean, you never know, Sahil. You never know. You know. Now the thing is, you're going to hold through a correction, though, right? Is that your goal? Are you going to hold Aklo through a correction, Sahil? So if you're willing to hold through a correction, you're probably, you're gonna deal with the pain. I mean, Sahil had a nice hit in Tesla, by the way. I think he got out of yesterday, rolled yesterday. But this was a big money trade, Tesla. Oh, yeah. So there you go. You had a little bit. I mean, I wouldn't even call it pain, say a little frustration in Tesla. I don't think it was really that much pain, was it? Just frustration. Yeah, but you kind of knew a day like that was coming, right? That's probably why you got out yesterday into this trend with the deliveries and all that. And then you added to it, right? This again probably I should have held everything. Let's be honest. Everything I sold was the wrong move. Everything. But I had a nice spot there in Tesla too, where I joined your party, on the breakout here. Well, what are you gonna do? Yeah, I hate that stock. I hate that stock, AB. This PayPal. I don't know what goes on with it. There's just a lot of news, negative news in it. I don't even know, what are they like? Are they changing their business now? What are they doing? You talk about hockey stick. This is a tough one. This is a tough one. This is a tough one. Oh, Oscar, that's another one. You kidding me? Oh my God. The whole steam room had this stock. The whole steam room was in this thing. Look at this. Unbelievable. I tell you, I don't know about you guys, but it's bad. That's what this game will make your head spin. This game drives you nuts. It makes me lose sleep seeing these type of moves. I can't sleep at night. I can't look at these things at night because I won't be able to sleep. I see some of these moves. I'm like, oh my God. Oh my God. And so cheap, right? This thing was sitting there at $8, $7, $8 all day long. You could have bought it all day long. All day long. Right? Like even if you missed the first rip here, and then you got this, look at this, where they were just, they were bombing it too, bombing it. If I remember, I think this was they sound like a deal with CoreWeave or some shit. At first flow before that, they got news, and then it kind of fizzled out a little bit, and then they just came after it again, and everybody in the steam room played it. And then look at this rip, though. 8 to 30, basically. Oh, my God. Yeah, well, that's Sahil. And it goes back to like what we talk about, Sahil. Times like the last couple months, like this is what you hang around for. You know what I mean? This is why you don't force it in tougher markets, right? And you kind of just have to wait around for that fastball down the middle. That's it. You wait around to things set up a certain way for you. Again, making big money in this game is not rocket science. All you got to do is size up. It's just you have a higher probability of success if you size up in a better backdrop. Yeah, I know the Bitcoin. That was another good call. Bitcoin was the rotation of Bitcoin. That was another great call. Yeah, no, I'm telling you guys, that's one thing for me. Like probably the best thing I've learned. You hear the analogy, and I'm a big baseball fan, as most of you know. There's some baseball fans here on this stream, but it's just like baseball, right? Work the count and wait for your pitch. Right? If you can't hit a curveball and you're swinging at those curveballs in the dirt, you're not going to do much damage with it. Wait for the fat pitch, wait for your fastball, and then do what you got to do. I think that's the main thing in this game is the ability to get aggressive when you need to be aggressive and to tone it down when it's not the time to be aggressive. That's ultimately, I think, what makes or breaks you in this game. Because you can't, again, there are very few, and I'm not one of them, that can trade every environment and find success in every environment and just be that robot mechanical type trader. Very few. You know what I mean? Long side, short side, up, no side. I'm doing this, always finding something to do to make money. Like, oh, I got to make money every day. I got to make money every week. When you put that type of pressure on you in this game, the odds are stacked against you. Very few, man. Very few that can do that. And I've been in this game a long time. But what I've learned, the majority of people I've seen make it in this game, find success, make decent money, are the ones that hang around to when the time is right for them to lay down the hammer. And you think about it in like professional gambling terms, right? And I was around professional gamblers my whole life since a kid. I used to go to the track with these people, and like a degenerate, me and my father, there are 12 races on the card. We're betting all 12 races. Not only that, we're betting simulcast, different tracks across the world. We can't have enough action, right? Every race I had to have money on. These professional gamblers, they go to the racetrack, they sit down, they have lunch, they read the paper. They're there for one race. One race they came to the track for. And that's where all the money's going. That's what it's all about. Yeah, a lot of big winners here. Again, I lose sleep over it. I can't talk about it anymore. I lose sleep over it. Andrew, I guess, it depends. Again, for me, I can only tell you what I'm doing. I've definitely trimmed weight-wise. I've definitely trimmed a decent amount. And but I still want to be involved. Like I'm still holding on to stuff and I'm still looking to buy stuff, but I'm a lot more selective. But there's definitely a change in character from, where I've been from April up until a month ago. No doubt. No doubt. I have to. Again, everybody looks at this game and looks at bullish or bearish, where there's a lot of in between. You understand? There's a lot of in between. I think priority one for all of us, whether you agree with it or not, it's up to you. But I think priority one at this current state in time, the number one thing you should pay attention to is you don't want to give it all back here. Okay? Nobody knows. Anything can happen. Okay? Anything. A missile can fly aloof tomorrow and set the world on fire. I think right now, especially what we're coming off of now, the easy money, priority number one should be, okay, I want to hang on to a nice chunk of that. What am I willing to risk of that to try to make some more money? That should be, in my opinion, priority number one here. Everybody's got different character and emotions. For me, it's not going to bother me much if the market continues higher and I miss out on making more money than I'm making right now. You understand? That time has come and gone. Like what I'm talking about with Sahil here, what I'm losing sleep over are the names where I was aggressive and where these things are at compared to where I sold them. That's where I get FOMO. When I need to be aggressive, I am aggressive, and I'm never happy. You always want more. But you understand, right now, like, I'm totally fine. If we continue to do what we're doing here and I make some more money along the way, I'm totally content with that. I don't have to make more than what I've made up until this point. Like Dimitri said, the majority of people who are doing that missed the rally. That's why they're taking that approach. They missed the bulk of this rally. If you had the luxury that you were involved in this rally and you made a good amount of money, which you probably did, okay, the focus should be holding on to a big chunk of it, in my opinion. Yeah, Andrew, you never know, bro. It could be anything, See, the things are too. These right before COVID hit, things were uber bullish. Okay, uber bullish. Everything was a go. The market was ignoring everything and just kept pushing higher. Now, positioning was a little different. Okay, but still, you still had bullish runway there. There was nothing really stopping the market until COVID showed up. Right? So you never know. I'm not trying to scare people, right? It's a rare event. It's not common for that to happen. But I think if something shows up like that now, you have enough long money out there that the market's going to take a hickey. And if you're heavier now than you were in April and May and June, you're going to give back all the profits and then some. You know how quick it happens, especially in options, right? You get caught with a basket of calls here, short-dated calls, and you own ACLO, IONQ, RRs, all these little shits that are up 300%, and then they nosedive off a shock, you'll be buried like that. You'll be buried. Happens quick. You can't avoid it. Okay? But if you take an approach, kind of what T was saying, that keep the chains moving approach, you buy something new, it goes higher, you trade out of it, you buy something else, you get stopped out of it, you buy something else, it goes higher, you trade it. Okay? Then a shock happens, you get caught. You get caught, you have some exposure, but not what you had a couple of months ago. Okay? If a shock shows up, yeah, it's going to sting, but at least you come out net a winner out of the whole equation. Yeah, and that's the thing. So, things add up. We don't realize it in the good. When things are going good, you don't realize like how much you got on. I didn't realize until recently where I'm trimming shit, and I'm looking now. I still have TEM. I still have like the new SGHC, AUR. I got Runners in Wolf. I got Hut. I got these things add up. These things add up. Right? So again, we're not seeing those warning sirens going off on signal-wise what we look like, because if we did, I'd be a lot more aggressive in raising cash. A lot more aggressive. Earlier in the year, for example, while those sirens were going off, I sold everything, basically almost everything. Even runners, I sold a lot of. Now, knowing the type of correction we had, I probably would have held on to some of the runners, knowing now how that played out. But I didn't know what that correction was going to look like. Might have been worse than we got. So I think right now, that should be your number one focus. Okay, if it's smooth sailing for the rest of the year, we're fortunate. That's great, because you'll probably make a little more money. But right now, you need to focus on protecting a big chunk of what you made. You know what happens to pigs in this game. It's okay to get greedy at times. The problem is staying greedy. You're always going to get caught. It's the inevitable. You understand? You're always going to get caught. I'm telling you from experience. It would happen to me every effing time. Every time. I would kill it in a bull market, and then the first leg of a correction, there go all my profits. By the time the correction was over, I was in the red net. Right? So 7 months of bull market rally, I made money. 1 month of a correction, I got buried. Where you going? Where you going in that? You're running into a brick wall. So you want to be smart about things. It's okay to get caught, but you don't want to give it all back. It's the worst feeling in the world. Yeah, if I'm in all cash, especially you, Thea, why I'm in all cash, right? You're gonna have Sharpies, they're fully hedged, right? All these things are gonna be screaming at us. Screaming. Right now, you see where they're at. They're not there. Right now, we're more worried about a shock, or kind of just a mini little drawdown here. That's it. That's what we're trying to soften the blow on. But, I still, again, when the times are good, that's what you got to think about. I know it's difficult. I know it's not easy. All right, my friends, I'm wrapping it up here. As always, I appreciate everybody sticking around after the market, talking some shop. Everybody, enjoy the rest of your week. Friday, tomorrow, another week. Right by another week. But yeah, non-Steam Room guys out there, enjoy the rest of the week. Have a good weekend. Steam Room members, I will see you mañana. Good night, everybody.